All right, let's get right into it because we've got a real head-scratcher coming from the House of Mouse. You look at the numbers, and it seems like Disney just hit a home run. I mean, a fantastic earnings report. But the market, it reacted like Mickey just saw a ghost. So what in the world is going on here? That's what we're going to figure out.
So this is the puzzle, right? Think about it. The top brass gets on their earnings call and starts checking all the boxes investors love to see. Streaming is finally making serious money. Check. They're going to buy back a ton of their own stock. Check. And they're giving shareholders a huge 50% raise on their dividend. Double check. The stock should have soared, shouldn't it? Nope. It tanked. So what did the market see that the rest of us missed?
And here you can really see the disconnect I'm talking about. On one side, you've got this fortress of amazing news. On the other, just a sea of red. It's like a chef serving a five-star meal, and the customer just gets up and walks out. And that is the tension at the heart of this whole thing, the fantastic report versus the terrible market reaction. Okay, to really understand this, we have to start with the negative side of the story. We have to look at what's spooking Wall Street. What are the fears powerful enough to just completely erase all that good news? So let's dive into the bear case against Disney.
And it really boils down to two big looming clouds. First, you've got these really nasty ongoing fights with cable and streaming distributors. You know, the ones that keep Disney's channels off the air for millions of people. And second, there's this growing worry that maybe, just maybe, Disney has pushed its prices a little too far and customers are about to say, that's it, I've had enough.
And look, this quote from a Reddit user just cuts right to the chase. It's not just some abstract corporate squabble, right? This is millions of fans literally paying customers who are getting caught in the middle while these giants battle it out. And that kind of thing, it does real damage to the brand. Investors are definitely paying attention to that.
And here's that second big worry, pricing. And this, well, this makes it incredibly real. Forget all the abstract Wall Street jargon. This is what it looks like for a real family. I mean, when a family trip costs that much just to walk in the door, you have to ask, how much more can people take? That's the question that's making Wall Street really nervous.
Okay, so that's the scary stuff. But that is only one side of the coin. Now we've got to hear from management, because from inside the Magic Kingdom, they are painting a completely different and very, very bullish picture for the future. So the bull case kicks off with this huge number, $1.3 billion in operating income just from streaming. Now, to really get why this is such a game changer, you got to remember where they were. Just 3 years ago, this same division was hemorrhaging money. We're talking a $4 billion loss. So that's not just a profit, that's a gigantic turnaround. It's proof their huge bet on streaming is finally paying off.
And they're not stopping there. They are putting their money where their mouth is with a plan for a $7 billion share buyback. Think about what that says. That's the company itself basically screaming, hey, we think our stock is a bargain right now, so we're buying it ourselves.
On top of that, they're giving back directly to shareholders with a 50% dividend hike. Again, this isn't just a nice gesture. It's a signal of a really healthy company with a strong balance sheet and a commitment to rewarding the people who invest in it.
Now, this next part is, I think, super interesting because it gets into their actual strategy. A whopping 80% of people signing up for the new ESPN streaming service are also grabbing the bundle with Disney Plus and Hulu. Management loves this. They call these healthier subscribers, which is just a fancy way of saying these people are way less likely to cancel. It shows the bundle is working.
And of course, you can never ever count out Disney's secret weapon, its unbelievable library of characters and stories. I mean, just look at what's coming down the pipe. These aren't just movies, right? They are massive cultural events. Each one of these titles is an engine that powers everything else: theme parks, merchandise, streaming, the whole shebang.
All right, so there you have it. Two totally different stories about the exact same company. On one hand, you've got this narrative of risk and worry, and on the other, a story of incredible growth and smart moves. So let's put them side by side and see where the real battle for Disney's future is being fought.
So this really breaks it all down. The bulls are cheering for streaming profits, huge returns for shareholders, and that killer lineup of new movies. The bears are pointing at the slow death of cable TV, customers pushing back on prices, and tons of competition. But here's what's so fascinating. For every bull argument, there's a bear counter-argument lurking. Streaming is profitable, sure, but can it grow fast enough to make up for dying cable revenue? That amazing IP lets them charge high prices, yeah? But what happens when people stop paying? This is the tightrope Disney is walking right now.
Which, of course, brings us to the final multi-billion-dollar question for anyone looking at this company. After seeing both sides, is this massive stock drop a huge buying opportunity, or is it a warning sign of a trap?
You know, at the end of the day, Disney's entire empire is built on one thing: telling incredible stories. But the most important story they have to tell right now isn't for the movie theater. It's for Wall Street. They have to write a convincing next chapter that proves they know how to win in this crazy new age of streaming. And that is the story the market is waiting to hear.